Hi, it's Eric Daly, and here's what you need to know if you're a retirement plan sponsor for the week ended Friday, April the 18th of 2025. Happy tax week. Hopefully everybody got their tax returns in. Um, the issues and themes around politics certainly continue over the course of this week. We are experiencing significant levels of market volatility, both in the equity market as well as the domestic bond market. Add to that the international equity market, as markets attempt to shake out what both the macroeconomic impacts may be of a slowing global economy and certainly what the micro impacts on individual stocks may be as they adjust to and take into account new tariffs, changes in tariff rates on a day-to-day basis. This is really challenging issue for plan sponsors to address and deal with. I think there is understandable concern. The most recent data that measures economic uncertainty shows that the current level of economic uncertainty among Americans is actually higher than it was at the outset of the COVID pandemic. So participants are anxious. They're seeing huge fluctuations in their defined contribution retirement accounts. And frankly, they're worried about how current events may impact the labor market, the cost of goods and services, and their ability to retire. I encourage plan sponsors to be mindful and respectful of that level of concern, to try and communicate clearly, and leverage the resources of your critical providers, record keepers, consultants, and the like, to help address those issues and try, to the extent possible, alleviate some of the concern. And that's not to say that there aren't things to be concerned about. There certainly are. But in defined contribution plans, the goal is accumulation of resources over a very, very long period of time. And this degree of market shocks is certainly not unprecedented. However, every time it happens, it creates tremendous understandable anxiety.